If you work harder for a job, you will pay more in tax. That is insane. There is this common notion that the rich should pay more in taxes to help out the less fortunate. But in reality, it is the middle class that is paying the bulk of the tax bill, specifically the educated middle class. The question now is how on earth this happened? Why do people vote for such a law that is punishing them? To get the full picture, Robert in Rich Dad, Poor Dad takes us on a quick trip through tax history. Back in the day, countries like England and the US didn't have regular taxes. They only slapped on occasional levies for things like wars. England made income tax permanent for its citizens. In 1913, America did the same. These countries managed to get taxes accepted by the majority by first targeting the wealthy. However, what's fascinating is that even though income tax was initially aimed at punishing the rich, it ended up pinching the poor and the middle class who voted for it. Now, here's where Rich Dad's wisdom comes in. You see, Poor Dad and Rich Dad had polar opposite views. Poor Dad, being a government employee, got rewarded for spending money and hiring people, making his organization bigger. Here is the deal. As the government grows, so does its need for cash. Poor Dad believed in government assistance. Working for the Peace Corps with Robert's mom, they always chased more grants and budget increases to hire more folks. For Robert, it was quite strange to work for one of the biggest capitalists in town and go home to a prominent government leader. It wasn't a walk in the park figuring out which dad to believe. Over time, Robert discovered a unique perspective as he delved into tax history. As the government's hunger for money expanded, taxes eventually started to hit the middle class and later the poor. But here's where the rich got smart. They played by different rules. Corporations offered a way around taxes. Understanding the legal corporate structure gave the rich a hefty advantage and let them outsmart the rest. See, the government's ideal is to avoid having excess money. If they don't spend their allocated funds, they risk losing it in the next budget. But business folks are rewarded for having excess cash and are celebrated for their efficiency. As the government kept spending more, they needed more taxes, this time hitting the middle class and eventually the poor. Now, let's unravel the magic of corporations. They are essentially legal documents that create a separate legal entity. They don't have a physical presence like a factory or a group of people, but they offer lower income tax rates compared to individuals. Certain expenses can also be paid by a corporation with pre-tax dollars. If those who work hard for a paycheck could only understand how the rich play the game, they could turn the tables too. The problem is, the harder you work for a job, the more you must pay the government. Taxes often end up penalizing the very people who voted for them. Efforts to penalize the wealthy often fall short because they find ways to reduce their tax. For instance, Section 1031 of the Internal Revenue Code permits seller to delay paying taxes on real estate capital gains by exchanging for more expensive properties. What that is saying is if you keep trading up, you won't be taxed on that gains until you sell. Missing out on these opportunities means missing a chance to build your asset column. Throughout his years of guidance, Rich Dad taught Robert that knowledge is power. With money comes great power, but the right knowledge is essential to keep it and make it grow. Without that knowledge, you can be easily pushed around. The tax authorities can be tough. They are always trying to take more if they can. Don't let them. Make your money work for you. Experienced tax consultants and attorneys are worth their fees, as they are often cheaper than paying higher taxes. Ignorance of the law can be costly. In his mid-20s, fresh out of the Marine Corps and working for Xerox, Robert was dismayed by the deductions from his paychecks. This motivated him to establish his first corporations in 1974 and work harder at his day job to accumulate as much cash as possible for real estate investments. Robert soon became one of the top salesmen at Xerox, and within 3 years, his real estate holding corporation was earning him more than his job at Xerox. The lessons from Rich Dad helped him escape the rat race at a young age, and now he aims to assist others in achieving the same. Financial IQ or financial intelligence is the key. It comprises 4 components: accounting or financial literacy, investing or making money, understanding markets or supply and demands, and the law or tax advantages and protections. Understanding the legal advantages is crucial for long-term wealth. For example, corporations can pay expenses before paying taxes, while employees get taxed first and must manage expenses with what is left. Certain expenses can be pre-tax for a corporation, such as board meetings, car payments, insurance, and health club membership. Corporations also offer legal protections against lawsuits. When someone sues a wealthy individual, they often discover that the wealthy person owns nothing but controls everything. Robert encourages those with legit assets to explore the benefits and protections offered by corporations. Books like those by Garrett Sutton can be a valuable resource. We will go through that book in detail one day in this channel. That wraps up chapter 4 of Rich Dad, Poor Dad. Taxes are like a game, and the rich have mastered it. With the right knowledge, you can level the playing field and make your money work for you. Remember, it's not about working harder for a paycheck. It's about working smarter with your money. Until next time, stay informed and let's continue learning together. Cheers!